how are you doing?
Fine.
Very well.
Karibuni.
Asante sana.
Yes.
We want some juice.
Which one?
Yeah.
Welcome.
Thank you very much. Thank you. What is everyone talking about today? COVID-19. And what does COVID-19 got to do with investors? We are just going to be talking about that today. And I have a very important guest, Kevin Gige, the senior equity trader at NCBA Investment Bank. Welcome, Kevin.
Thank you very much.
Before we go into investment, what is COVID? Everyone's talking about COVID.
I think probably we shouldn't have started by shaking our hands.
Oh, sorry.
Yeah, everyone is advising us against that, yeah. I think for now it's namaste or we tap our feet.
Yes.
I mean, COVID is a flu-like infection, yeah, that started sometime in end of December, and that's been hurting us till now. So
Less than 10 weeks ago.
Less than 10 weeks ago. The symptoms are very close to a normal flu or cold, but then the mutations and how it changes has made it different, and now it's been internationally known as the COVID-19 or the coronavirus 2019 since it started sometime in December. So yeah, basically as an introduction, that is it. It's a virus.
It's a virus.
Yeah, with no cure so far.
Yeah.
But that is containable and manageable.
Yeah.
Yes.
So Kevin, and now we have a fairly good understanding what COVID-19 is all about. I think you and I are not doctors, so we are more of investors. So this is more of an investment conversation.
Correct.
Why should investors even care about this COVID-19?
That's an interesting question. It's a very broad question. I'll try and summarize it here.
Yes.
So since the outbreak of the COVID, sometime in December, call it January, to now, again, less than 10 weeks, we've seen massive sell-offs in the world, globally, not just Kenya.
Yeah.
And Kenya being, again, at the tail end of, we call it the frontier. You know, we have the frontier, you have the emerging, then you have the developed worlds.
Yes.
We tend to bear the brunt of it, yeah?
Yes.
So most of the sell-off will start down, which are the risky assets that brings us all the way to the top, yeah?
Yes.
And now we call it flight to safety.
Flight to
or
quality.
buying, or quality, or buying the safe haven assets. And again, when things fall off as with the magnitude that we've seen, mostly not because of fundamentals, so the companies are still strong and sound. It's mostly been the fear of the unknown, you know.
Yes.
And our market being 75% international driven, you can understand the sell-off. But the question is, as an investor, what is in it for you now?
So money is living.
Money is living.
Money is living and going to safe havens.
Correct.
Yes.
Yeah.
So that's a serious impact.
That's a serious impact. You know, we, again, as I mentioned, 75% of our turnover on a single day is FDIs.
Foreign driven.
Correct.
Yeah.
So when these guys are pulling out, and we've seen the effect of that, especially when you look at the German bonds, 30-year, we're having that discussion where they are now negative yielding.
Yes.
And people still prefer it because it's a safer, they'd rather pay for safety than put their money here with the fear of the unknown. You understand?
I'd rather pay a 1%, 2%.
Correct.
Back at home.
Than risk at 20%.
Than risk at 20% write-off.
Correct.
But even the developed economies, their markets are also falling off.
Correct. So when you're talking about equities, and that's what I said, it's right from the bottom all the way to the top.
Yes.
So it becomes from, we start with Kenya, of course, because of the sovereign risks. We have other risks on top of what is now
sovereign risk.
Correct.
Yes.
So you have the sovereign risks, and it gets better as you go up.
Yes.
So your equities again, now it becomes now portfolio realignments.
Yes.
So do we move which are the ones that are hard hit, especially during a pandemic?
Yes.
You know, it's your equities.
Yes.
So now there's the shift from equities to, you know, your fixed income, to your hedging stocks, you know, to your other stocks that quotes and quotes will not be as hard hit as your equities.
Yes.
Yeah. So that's what you're seeing globally.
Yeah.
It's been a red ocean.
Yes. So
Sorry about that.
Sorry. Investors. So I hope it's not COVID-19.
No touch. So yes.
It's not a COVID-19.
Yeah.
I think we've just spoken too much about it.
It might get into you. All right.
Yeah. So then it's a question of, is the trigger for investors to come back into the market or the companies to start recovery the cure, distribution of the cure, or just being able to live with it, coexist with it.
Correct.
It seems to be like two possible triggers. Yes.
Yeah. I mean, I would quote Warren Buffett, and he always says, buy when everyone else is panicking.
It's panicking,
yeah.
yes.
As an investor, that's the best time for you to get in.
Yeah.
And if you look at our stocks right now, I mean, it beats all fundamentals. They're definitely cheap buys right now.
Yeah.
And it's a time for you to come in.
Yeah.
And basically just average down until the panic stops. Yeah.
Yeah.
Definitely there's value. When you're talking about Safaricom with a valuation of 35, and now we're talking about a price of 23, we're talking about an upside of close to 25%. Yeah. So that in itself is a buy signal.
Yeah.
So for me, and the beauty about the COVID is, again, as I said, it's now under a period where it can be contained. Nations know more about it than we did. China was not lucky because, I mean, it hit them. They had to teach the world on how to deal with it.
Yes,
That's why I mean, quickly we saw cases shoot up to 80,000.
Yeah.
I don't think we've seen that in most of the other countries. Italy, South Korea have been hard hit, but you're talking about sub 5,000 cases, you know. So for us as Kenya now and the rest of Africa, is we know more about this than China did. So we are at an advantage point. As an investor, I think this would be the time to start piling up, because these are definitely cheap stocks. When you're talking about your banks, you talk about, for instance, KCB. You know, you're talking about valuations close. I mean, average valuations, you're talking about 65. In the morning, you're at 41. So you're almost talking about a 50% jump in return. If you're not buying now, I don't know when you're going to buy. Because it only takes a day when this is contained and it shoots up and you miss the bus. So for me, it's always buy when everyone is panicking, sell when everyone is comfortable. Correct.
And I think what the investors are wondering is last week it was similar.
Yes, it's the same
27 shillings, 28 shillings on Safaricom.
Correct.
The thing is still falling like a stone.
Still falling like a stone. So we might go to sub 20 soon.
It might go even to sub 20.
Yes.
So that's what makes investing interesting, and that's why investors should care.
Correct.
So
that's the biggest reason they should care.
So I think the question is COVID-19 just brewing a pleasant surprise for investors at some point?
It's a silver lining.
Yes.
It's a silver lining. I mean, it's not always gloom and dark.
Yes.
It's a silver lining for investors.
Silver lining.
Yes. I mean, everyone was pricing in for a recession since 2008. We never got that. So we saw everyone preparing cash. You're talking about Buffett. He had close to 121 trillion Kenya shillings. And he's about to raise more at zero. So the question you should be asking yourself is what Buffett is piling up cash for. And every single day you'll see him saying, it's time to buy all the cheap stocks that are there. Buy when everyone else is panicking and crying. You know, you're going to walk to the bank when they're getting comfortable. So this is a silver lining, I believe, for investors. It's the reason they're paid. It's the reason we are paid. It's for us to find value, and of course hedge again against it. Is to create value for all the people we invest for. And I believe this is the time to buy. If this is not the time to buy, I don't know when. You understand? So whether you buy your suit at 40,000 and you buy it at 35, we all have decent suits that are going to last us for. There's a reason we are willing to pay that amount. You know? There's a reason you're willing to pay a bit more. So for me, it's time to buy. Should the market continue falling? Well, it's time to still accumulate and average down. At the end, you're going to come to an average and you'll have already accumulated your stocks. As opposed to sit and wait approach and wait for us to find a queue and everything, it might be too late for you. Because the market will only take a market a day or two to shoot up, and you might not find the volume or the value.
So investors should care. That's what you're saying.
Definitely care.
Should care.
Yes.
Thanks. I think we'll take a pause there, then we'll go to the next session.
No worries.
I hope you heard that. There is a silver lining. It's not all gloomy and dark. There is a silver lining. We'll take a pause there. Please subscribe if you want to listen to our next conversation on the impact globally and locally. Thank you.